Hey, good afternoon, Bill Burnett, Homestead Mortgage. Hey, just wanted to throw you out a quick little video, update you on what's going on. Really ugly week for interest rates and the mortgage-backed security market. Actually, stocks haven't done real well either. Usually when the mortgage-backed security market's doing really bad, we're seeing results on the other side, i.e. the stock market going up tremendously. Let's take a quick look at where we're at and what's going on. Back in early to mid-July, we started a really good run up, especially the day that Trump started talking about the China tariffs. We continued to go sideways and made a really strong run and broke through this Fibonacci level right here, which has been we tested it a couple of times here recently, but couldn't get through it and stay above it. Broke above it, stayed above it, and followed up the next day, so thought we were on our way to lower rates. And then, you had the on and off again, President Trump talking about putting tariffs on, taking tariffs off, delaying the tariff talks, moving the tariff talks up. And so one thing about the markets, both the mortgage-backed security and stock markets, is, bad news we can deal with, good news we can deal with, as long as we can plan and know what's going on. But inconsistency or not knowing what's going on tomorrow is really tough in the markets when they don't know how to plan going forward. So that has hurt the markets quite a bit. We also saw European Union drop rates. They are in bad shape. Actually, globally is not doing real well. Even Germany went to negative interest rates, so it's not looking good out there. Between that and the tariff talks, the uncertainty, that's caused a lot of things to go south on us right now. Let's look up here at the top left, down 59 basis points. I actually saw it down at least 60 basis points a couple times today. Lenders usually reprice 18, maybe 20 points. They start looking at repricing. We had many lenders actually reprice twice today for the worst. So that's how bad the market was. 59 is huge. You don't see that hardly ever in a day, and it's usually a very, very bad sign. We'd have to go all the way back to, probably here, July 11th, when we saw a day that was close to it. That was still only about 50 basis points, so this is still actually worse. But one of the things that the indecision in the market, the global economy, certain countries going negative yields, are all contributing here. The other thing we have to be very careful of is looking at the technicals and the floors of support and ceiling. It's amazing how accurate these are, but as you look, we had the 25-day moving average coming up here, and we had this Fibonacci level right here, kind of intersecting here. And when we hit this point right here on the 6th, I thought, well, okay, great, we've got plenty of support. We've got a Fibonacci level close by. We've got a 25-day moving average, and it didn't hold. And it fell through, and then next thought, it actually started locking interest rates, some here. Most everybody else I had here. Unfortunately, a lot of people in the industry that don't follow the graphs and charts kind of got stuck and didn't get into a position to lock an interest rate till way down here, and that's at least 0.25%, if not more, difference in interest rate, at least. These are lock signals, the little yellow triangles on the top. And we've had 1, 2, 3, 4. 1, 2, 3, 4, 5, 6. 4 in the last 7 days. That's ridiculous. That is not good. Same thing happened here. The 50-day moving average right here. Again, figured, okay, that's going to be a strong level of support. And boy, that didn't even hold long at all. That went actually down the following day. The next day it closed below it. And once we couldn't, get above that 2 days in a row, I had a good feeling they were going to go south a little bit, and boy, did we. I mean, we went all the way down. We're almost at the 100-day moving average. That's at 100.52. We're currently at 100.58. There we go. See, we're down 60 basis points again. So that is hopefully going to be a landing point, a stopping point, so the markets can take a breath and recover here. Still feel good about, the end of this year, rates being better. We're going to recover this. It's just a confluence of many things happening kind of all at the same time. Nothing super severe. Inflation's under control still. The retail sales are still good. Everything's happening in a good way. One thing that you get in that indecision in the global stuff, and then people start to panic, and then the technicals start to get broken. 25-day, the 50-day, these different levels of support, and then you have the computer traders jumping, automatic trades happening, and that contributes to as well. So just want to give you a quick update, let you know where we're at. Heck, even the S&P's down, and I'm sure, let me look real quick here. Let's see here. The Dow is down, only up 37 basis points. So when you see a situation where you have really ugly stuff happening in the bond market, and the stock market's not charging full speed ahead because people are taking money out of the bond market to ride the stock market up, that's not good. If we're doing this bad and the stock market's only up, fractionally, barely above zero, that's not good signs. So I just want to give you a heads up. Let's take a quick look at the treasuries. They're doing the same thing. They've broken above their 25-day moving average a while ago. They jumped above their 50-day moving average today, and it's up 12 basis points. That's getting up there, and sooner or later, I think we're going to be in a position where these things are oversold if we're not already there, and the market's going to have an appetite to buy back in, and we should see some reversal. But for right now, things aren't looking real good. Oh, the spread, let's look at that inverted yield curve. So right now, we are at 1.81 on the 2-year and 1.90 on the 10-year. Still not inverted yet. We've moved back. We're not inverted on the 1-year either, so we've kind of reversed the inversion. I'm not sure if that's something to do with what's going on with the markets, trying to adjust that. Looking for the Fed to cut rates 1/4 point at the next meeting here soon. That should have an effect as well. So, but just want to give you a heads up. If people are kind of looking at why did the interest rates, what's going on? So I'm not hearing a proper interest rate either from another lender or online. This is why, and it's an industry-wide thing. So nothing special out there with rates. Spurt inflation, get cheaper or lower. This is across the board. Not looking good. Any questions, though, give me a holler. I'll be updating us as we make a change in the other direction or at the end of next week as well. Any questions from your buyers, sellers, family, friends, or yourself about the technical side of the market, or looking to get pre-qualified or pre-approved, then please feel free to reach out. Bill Burnett, 703-598-4198. Thanks. Have a great weekend.